why? There is a lot of money to be made in the stock market, especially since the 2008 recession. The uncertainty in the business environment has created tremendous opportunities for a discerning investor to make a lot of money. Some investors have doubled their portfolio, and some have seen some of their shareholdings increased by over 2,000%. Yes, over 20 times their values. One of the companies that had one of the highest returns in 2010 was a company called Condor Resources. Its symbol in the London Stock Exchange is CNR. It's a UK-based company and is engaged in gold and silver exploration in South America. This company's share price had averaged about 0.46 pennies, that is half a penny a share, and this was over a period of 6 months, January to September. Then all of a sudden, well, it's not really all of a sudden, because there were forces in the market, in the business environment, that led to the price of the company's shares growing, and it peaked at 10.75 pennies on the 31st of December. That is over 2,000% increase in price. So if you were an investor, you would have made a lot of money from this company. For illustration purposes, this is what you could have made in December or early this year if you had traded the stock. Say you had invested £100 and you bought you bought the stock at 0.46 pennies per share. That would have given you about 21,739 shares. And then you paid your stamp duty, which is 0.5%, which comes to 50 pennies. And then you paid your brokerage fees, and depending on the broker that you're using, you pay £12.95 or £15. It varies. So your total cost would have come to £113.45. And then you go back to your day job, and just keep an eye on the stock and watch it grow. And assuming that you had decided to sell the stock when it had peaked at 10.75 pennies, your 21,739 shareholding would have yielded 2,336.96 pounds. And then you pay your brokerage fees, which is £12.95. You don't pay stamp duties anymore because you only pay it when you buy. And that would have given you a net proceed of 2,324. And assuming you had deducted your initial investment cost, which was £113.45, so you would have had a net cash position of £2,210. That is a handsome 1,900% increase. Now, if you had put £1,000, you would have had a net cash return of £22,000, 338. This is what some people make on an annual income. But anyway, this stock price has since dropped to about 6 pennies from its 10.75 highs. So at the moment, on the 31st of January 2011, it was trading at 6 pennies. So if I had decided to sell the stock on the 31st of January at 6 pennies, you would have still grossed 1,177 on your £100 investment. And of course, if you had invested £1,000, you would have made £12,000. And this is still a fantastic investment, even at this much lower price. So the question is, how do you select winning stocks? In other words, how do you select tomorrow's Condor today? For some answers, visit www.amawell.com. Amawell has been selecting and investing in winning stocks for the past 24 months. Our website provides a schedule of the performance of our stock selection called Amawell Portfolio. And as at February 1st, 2011, our portfolio had averaged 65% return on investment. And visit amawealth.com and find out how we do it, or begin to invest in some of our stocks, in our stock picks. Thank you.